Hello traders, welcome to your technical market update for Thursday the 26th of February 2016. We are on the New Zealand US daily chart and let's get stuck into it. I trust that you've all watched the fundamental video and we will rip in and see if we can find some opportunities based on those fundamentals. Alright, so as you can see here we had a very strong New Zealand versus the US. And on yesterday's session, due to pretty lackluster US dollar and also some positive news coming out of New Zealand, as I mentioned, trade balance was overall improved. However, the market didn't get excited on the back of this because we had lower exports and imports as opposed to what we would have wanted. But Fonterra come out and said that they will maintain their payout for the dairy farmers, so the market did enjoy that. And we could see some positive reactions there. However, all commodity currencies were typically supported by positive Chinese data during yesterday's Asian session, and also the fact that oil bounced 3% overnight. We are still seeing here that we have a very positive candle. Based on this, momentum is still very bullish for the New Zealand economy, and I think that we are going to get a push now up to the Fib 38.2, which was the old resistance, old support, which should become resistance and tie in with the long-term downtrend. So we'll have to see how that plays out. And but for now, I think we could be looking for the odd bullish opportunity. Now, a run to 76 cents is probably the play to have if we have a slight pullback, and then if I go to a 1 hour chart here, and if we just put in a simple trend line, current support is yesterday's support is here. So 75.2 cents. Now, if we get a strong breakout here and a move up into 76 cents, we could make some money buying at 78.8 and getting out at 78.9, banking 10 pips just before the market actually touches the 76 cent range. We don't want to get too greedy. We want to allow ourselves a couple of pips there just to make the high probability trade and pick up 10 pips. And then other than that, I don't really want to try and call the top as I was saying, but I'm just aware of the long-term resistance level. And I don't want to be entering new long positions around here. I want the market to tell me where it wants to go. So that's about the only trade that I would take, is just try to get 10 pips going long, especially after this bullish momentum. I think it will carry out into today's European session. And if we can get 10 pips there, that's a pretty good trade. But don't push your luck and try and call it all the way to 76.1 and to this Fibonacci level that we have been eyeing off for some time, the last few trading sessions all around here. So that's about it. If we have a look at the Australian dollar though, we can see that it actually had a rally as well on the back of the same Chinese data and all the same reasons. However, it has come off. If we go in, you'll notice the price rejected smack bang on the 79 cents. We placed a trade last night up in here and we went short the Australian dollar and we picked up 25 cents. 25 pips, I should say, a few hours later. The reason why I only went for 25 is because you've got this historical resistance level which could have become support, and we can still, if you pull a Fibonacci, assuming that this is a rally, this is a pullback, and we're looking for a support area before we move the next move north, well then I really wanted to make sure that I was out at the 61.8 here, and we got out there, took our pips, good 25 pips overnight. Actually took profit when we were sleeping, well, when I was sleeping, and I'm happy with that. But where it's going to go to now, I will be looking for support in this area here, and we could possibly swing trade it back up into this area here. Once again, I won't be trying to swing trade it all the way back up into this highly point of convergence where we have a series of Fibonacci's and downtrend lines and resistance all meeting around the 79.2 cents. I won't be trying to trade it from here all the way to there, just be pushing my luck. I just prefer to get the high probability trades. So we'll look for some support there, and if we can find it and pick up a few pips, well then that's great going north. And that's purely just due to the momentum of in the short-term basis. Overall, like I've said, I am a bearish on the Australian economy, and I am a bear basically under the impression that the Australian dollar doesn't deserve to be in the 80-cent arena. We just cut rates and we still haven't even priced that in yet. We cut rates, the market dropped, and we're at a higher level than we were previously when we cut rates. Our economic data hasn't improved, and at some point the market will catch up with it, and we will get a breakout of this short-term pullback. And for my money, it's in this point of convergence over here before we move the next point north. It's going to take some data to initiate that move, but we'll keep an eye out for it. So there's another short-term scalp that we could look for on the Australian dollar. We've taken profit on our trade for the Great British Pound. We got in over here, and basically we've taken 140 pips on 130 on one and 140 on our take profit number 2. I got out and I called it. However, it's gone another 37 pips above where I called it. So that's, you can't always call the top. That's life, that's trading. I don't dwell on those sorts of things. However, I think that we are going to potentially establish some resistance in this area, or the market could struggle. If we get some very weak GDP data come out tonight, we have got ourselves here a rising wedge, which is usually in the high probability arena, is usually broken out to the low side. So we'll keep an eye on that. However, we all know that I'm a bull on the UK economy. It is one of the strongest ones in the developed world, and there is a very good reason for this rally. And we don't really have any reason for a long-term breakout of this and a bearish trend to continue. Their economy is going much better than all the others, and they are maintaining in their recent BOE minutes and Carney's speech that an interest rate rise is still on the table for 2015. So we have the US economy and the UK economy still leaving an interest rate rise on the table for 2015, where other economies, I think we're up to 22 countries now, have cut rates so far this year, and we're only in the second month. If we have a look at the euro, we're still within this painful range. It's one that I just don't like playing. We don't have any convincing moves. However, in the fundamental videos, I mentioned be aware of the short-term squeeze and the reasons why, and I'll be definitely putting out a trade notification should we get an opportunity there. I have still got my straddle trade either side, but I may take that off now as that's not valid. Originally, we placed that purely on the speculation that a grease deal would have been done. It hasn't been done. We've just put a band-aid over it and delayed the issue for 4 months. Have a look at the CAD. Now, it's heavily been sold off. Very good reason. Oil bounced 3% overnight. The US dollar took a little bit of a hit on the back of Janet Yellen mentioning that they're going to leave rates on hold for a little bit longer than the market had priced in. Still, they're going to raise rates, but just not right this second. So therefore, we've seen the US dollar basically come off a little bit. Enthusiasm for it was lost, but this move was predominantly due to oil. If I go over to oil, you'll see the impressive bounce here. I mentioned this support level. It's the same one that I've left on for days. We've bounced off it, and now we have a rising star candle formation over the last 3 days. And it does suggest that we have established a fairly strong support here, just under 48.8, and we could be seeing further moves north. Now, if we do get that, there is no reason why the US CAD can't break this support. Now, that's a breakout trade you could place, and it's one that I will be looking for, and it's one that I will be doing. Now, if it does happen, if we just go out to a weekly, you can see the rally is quite substantial, and if oil does bounce and have a pretty good rally, there's no reason why the market can't move back to more sustainable levels. If I zoom out, you're seeing here like an exponential curve. And an exponential curve to here, where it's vertical, isn't sustainable in anyone's language. It's a typical bubble curve, an exponential. And the rational trend is more on this sort of slope here. And I wouldn't be surprised if the market was to drift back over to these levels before it maintained its status quo or normal trading. So if we were to see a breakout of here, we could make some money down into here, and that would be the easy money. And then as it moves over into here, you would be sort of doing some more scalping as opposed to taking big long trends. And it's purely on the back of oil. So if you're going to do this trade, keep an eye on oil, keep an eye on the US dollar, and it's one that we could definitely pick up some money on. It's one that I'll be doing, and I'll tweet out when I jump on it. So there it is for that. If we have a look at the US JAP, this is the only trade we're still in, and we are long. We're basically in at near our entry. I'll have a look at what price we got in, and we've gone nowhere. The US dollar situation has stalled. We need some further direction before we move on. All right, so here we are. We've got this triangle pattern, and I'm still not dead in the water. I still believe the trade's valid. That's why I haven't exited just yet. But if we don't start to see something soon, and we don't see some economic support on the fundamental reason for it to go long, I'll probably just cut the trade and use that equity in a much more profitable trade. All right, so there you have it. There's some technicals for you. I hope we can get some trades out of those tonight, and I'll be back again tomorrow. And until then, trade well.